Hey traders, Mike Sir here. Welcome back to my channel. I've gotten a lot of incredible feedback from all you guys in regards to my Trading in the Zone video series. As I mentioned, the videos were based on lessons learned from the book Trading in the Zone by the late Mark Douglas. Now, some of you may or may not be aware that Mark actually wrote another best-selling book on trading psychology called The Disciplined Trader. As you can tell from the title, being a disciplined trader is a major challenge in trading. So in this video, I'm going to share the top 5 things that I learned from reading this book, and I'll give you my personal take on each one. I would highly recommend that you buy the book and read it in its entirety. I listed a link below where you can buy it from Amazon. Let's get started. Have all of you wondered why self-discipline is so hard to obtain? In life, we know we should exercise, we should eat well, we should save money for retirement, and a whole slew of other things, but we don't. In trading, we know we should only risk the capital we can afford to lose, we should exit a trade with a small loss, or we should not be fearful or greedy, but we end up not doing any of the things I just mentioned. Why is that? Well, there are many reasons and factors causing us to be undisciplined, which I will outline in this video. But in life, we as humans like to run away from hard and uncomfortable situations. So for example, like working out and exercising on a consistent basis versus doing the easy and comfortable things like sitting in front of the TV while watching sports and eating junk food. We humans are sometimes lazy when we don't do enough due diligence on a stock or put together a comprehensive trade plan before we enter into a trade. It's just too much work, as we would rather take the easy route by just pressing the buy or sell button right away and sometimes hope for the best. You see, no one is born with self-discipline or the ability to manage one's emotions effectively. On the contrary, there are characteristics that we as humans acquire by learning certain mental skills, most commonly the hard way by trial and error. For example, we only learn to focus on risk once we incur a big loss on a trade, and for some people, it takes them blowing up their account before they learn to be more disciplined. So how do we be more naturally disciplined as a trader without having to endure any painful experiences? Now, before we dive into the how, let's try to understand why it's so difficult to be a disciplined trader. Let's picture yourself sitting in front of your trader workstation. Stock prices are constantly changing, prices are going up and down, news reports and earnings are being released. In this unstructured and constantly changing market environment, you're being asked to make split-second decisions that can either make you a profit or a loss. Now, does this sound intimidating for you? Does this cause you stress? Does this type of trading environment cause you to lose control of your emotions? Well, maybe. You see, maybe it's just the nature of the trading or market environment that's causing you to be undisciplined. And this is essentially why you need to establish trading rules to guide your behavior, to create structure and give yourself direction. Now, without any form of rules and foundation, you'll probably feel overwhelmed with too many possibilities. So for example, you could get caught up in trading based purely on emotion due to the constant fluctuation in market prices. And this is one of the reasons why you need to have a trading system that has a defined set of rules based on entry and exit prices. A system that can guide you on how to look for trading opportunities, what opportunities to trade, and generally give you a sense that you can confidently navigate through a constantly changing market environment. Now, once you have a trading system, the challenge for you is to follow the system to a T. Now, in the future video, I will teach you how to develop your own trading system. Before I share the next lesson, please take a moment to like this video, and if you haven't already, hit that subscribe button. I would really appreciate your support. The price of any asset, like a company stock, is always determined by the consensus view of all traders and investors. It doesn't matter what you actually believe in or what the fundamentals of a company are, the price of an asset is right if it reflects the consensus opinion, even if most traders are irrational and uninformed. For example, back at the height of the meme stock investing craze last year, where money-losing companies such as GameStop, AMC, and BlackBerry saw their stock prices skyrocket, not due to fundamentals, but due to their stocks gaining a cult-like following online and through social media platforms. Now, no trader can be more right than the market itself, because no one has sufficient financial clout to move prices around on their own for a long period of time. And this is why sophisticated hedge funds lost their shirt or closed down due to skyrocketing meme stocks, because they refuse to be wrong on their bets. And this is why successful traders can have their own opinions on where they think prices can go based on current trends and news events, but they don't cling to their positions when prices move in a different direction. You have to always remember that no matter what you believe in, the market is always right. Over my 16 years of working with many traders, I work with many newbie traders who don't have any experience in the markets. But I've also worked with far more traders who have at least 1 to 2 years of trading experience under their belt. In fact, I work with some traders who have well over 10, 15, or over 20 plus years of trading experience, and yet these traders haven't been able to achieve or maintain their trading success. Now, the reason why they're not succeeding is not due to their lack of knowledge, but because of past negative trading experiences and memories that they just can't seem to let go. You see, for some traders, the more trading experiences that they have, the more likely they will doubt themselves and the less likelihood that they would take action. So let me give you an example. Now, some of the experienced traders that I work with have a lot of what we call mental baggage that is holding them back in terms of trading. So for example, when they see a profit, they immediately sell it right away instead of trying to maximize their potential profits. The simple reason is they had past experiences where they held onto a stock too long and they ended up losing money on the trade. Another example is some of these traders won't sell their losing positions right away because in the past, either they saw that their previous losses ended up becoming winners, or they don't want to face the experience of losing again, so they keep holding on to their losing positions. For newbie traders that I work with, they don't have any experiences to draw from or preconceived negative experiences, so they're not affected by these psychological challenges. In fact, the newbie traders that I train sometimes have better trading performances immediately after working with them because of this simple reason. I'm sure many of you have at one point felt depressed, sad, or angry whenever you had a bad trading day, when you lost money, or even blown out your account. Or when you feel happy or ecstatic about life, when you had a good trading day and made money, or perhaps made a killing in the markets. Our emotions, whether happy or sad, are tied to whether we made a profit or a loss in the markets. Now this of course is normal because no one should be happy when they lost money, or should they? Well, sometimes. For example, let's say you got stopped out of a trade because it hit your stop loss price and you lost money on the trade. Well, if the price kept going against you and you got out with a smaller loss, then you should be happy, right? Or another scenario where you made a lot of money in the markets because a stock that you bought went up sharply in your favor based on some surprising news. Now, obviously you feel happy and proud of yourself for having bought the stock, but in reality, you were just lucky. Now, as I talked about in the Trading in the Zone series, the markets are unpredictable and you can't base your happiness on whether you made money or not. What Mark says is, irregardless of the outcome of each one of your trades, you should always have a positive energy or mindset. It promotes mental growth and learning by creating a sense of confidence, which in turn results in an openness to explore and discover the unknown. So essentially, by having a positive mindset, we're able to correct undisciplined trading behavior and be open to capturing good opportunities in the markets. So let's just say, for example, if you were mad or angry on a trade that you lost money on and you just can't focus on the next trading opportunity that could appear right in front of your eyes. You're so fixated on the loss that you just can't focus, and ultimately you miss out on that trading opportunity. If you enjoyed this video, smash that like button and comment below if you read the book. Please share with me what you thought were the biggest takeaways from the book. Also, if you want to share with me more of your thoughts on the book and trading psychology in general, please let me know in the comments below. I'll see you guys in the next video.